Hi, this is Kerry Artek with Wicked Stocks, bringing you an update in the TLT. That is the iShares 20-year plus Treasury Bond ETF. This is the most active ETF and stock trading entity that is correlated with the long U.S. Treasury bond, inversely correlated, of course, with longer term interest rates. So once again, as we've seen this drop over the last 4 years following the March 5 years, following the March 2020 high, interest rates have been in a relative uptrend, and that was accelerated obviously from November 21 to October 22. But we've been in this kind of two-sided framework. You can no longer really make the case that at least for the last year and a half, since October 23, that we've been in a lower low, lower high dynamic. It's been mostly sideways. Nonetheless, the 4-year trend, 5-year trend, basically, with this long bond instrument, the TLT, remains bearish below 95.21. So 95.21 is yet to actually be tested, but it is our price ceiling, a longer term, for the longer term interest rate market. You could pretty much make that case. I mean, I know it's an ETF. I know that it's not the 30-year Treasury bond, for instance, the U.S. Treasury bond, but it is a representation of that, and it's a tradable representation of that. And with this image, you can see that the trend in the 20-year bond or the ETF remains downward over the last 5 years, which is basically saying that the interest rate dynamic still remains one of a higher interest rate over the longer haul. There's been a pause, no doubt, for the last year and a half, but the emphasis remains negative below 95.21. Now, what did occur, if you've been following this occasional update series, I try to do this sometimes once every couple to 3 weeks, sometimes once every several months, depending on what's happening with the chart. But if you've been following it since really this January low and prior to that, we had this long-term channel bottom that is a 1.5-year channel bottom at 84.50 as an objective at one point. I think I can actually recreate that on the chart here. This was a sell signal that we played off of, and if I recall, there was also an inside channel that was the target, kind of a band of support. Now, this is still a tradable band or mid-band, but this is basic, just kind of a big, broad stroke, a look at this instrument. 84.50 is still a meaningful support that, if tested over the next month, 2 or 3, can absorb quarterly selling pressures, and once tested, we can round back up to 5-year channel resistance. We could trade inside of this wedge. It really narrows by July. So at some point here over the next 3 to 5 months, the market will tip its hand in a particular direction. And technically speaking, by a degree, odds favor a violation to the downside of the 84.50 formation rather than the upside of 95.21, just because of the predominant longer-term trend that exists below 95.21. But it doesn't mean that we won't close above 95.21 in the next few months either. Let's move on to kind of the fact that this was also a buy signal, if you recall. This was part of a video series as well, that back in late February, we closed above this descending channel top. That is 88.47 this week. This is a buyable support level. Sorry for all the noise. A buyable support level at 88.47 that can contain selling on a weekly, possibly monthly basis. And that's really the reason why I'm bringing this up today, is this rising channel bottom at 91.46. This is new. This is just this week. We actually opened lower, clearly below this steeply rising structure. This is a weekly chart, remember. So this structure does go back basically to January. It's 3 months in the making. It has its own trend identification. In short, if you were to ignore this descending channel top, having closed, well, we haven't yet, but if on Friday we close below 91.46, we do, I think, have a meaningful sell signal that you need to respect. Yes, we can bottom out at 88.47 on the way down for a week or two, but I think the risk is now to full bearish rotation back to 84.50. And I say that also because we may also close below this low of the high of 89.73. So if we combine the two, if we close this week below 91.46, 91.46, and this week below the low of the high of 89.73. I'm going to skew to the downside aggressively. 84.50 now in reach. With present volatility, this is kind of a 2 to 3 month move. A 2 to 3 month move to the upside, now a 2 to 3 month move to the downside. So playing the short side in the TLT is now the name of the game if your time horizon is 2 to 3 months out. Whereas if I can back up a little bit, we were recommending a buy signal over the course of 1 to 2 months back to 95.21. That did not happen, and we're now beginning to fall away. So I kind of want to ignore 88.47 as a support level. I'm actually going to erase it now. And I did spot this earlier. You can see this is just another characterization of this bear trend, this rate of descent that is parallel with the channel top. If you cast it beyond across this September high, you can see that we've topped out here recently. Now, I do watch these. I was watching this at the time, but I don't like to use this as an area to aggressively sell the market. I would rather wait for the extreme point. But the point that I think can be made here is that there is still this sort of dominant longer-term bearish dynamic for the TLT. In other words, a longer-term upward momentum, upward dynamic for the longer-term interest rates. So let me just sort of cut to the chase here. Closing this week below not only 91.46, but also below 89.73 does shift our focus back into the negative column near to midterm. Over the next couple of months, 2-3 months, we should revisit 84.50, where we can bottom out, as I say, I need to reconstruct this, where we can bottom out, through the second quarter and round back up. If we close above 95.21, then we have a significant buy signal, or at least a discontinuation, a neutralizing of this longer-term bearish momentum. And then the question will beg, what then? We'll see higher trade, but how high? I'm not going to get into that right now. I'm hitting 7 minutes. I think I've said enough. I'm going to leave it at that for this particular update on the TLT. You have a great day.